Welcome to the Live Better, Sell Better podcast with your host, Kevin Dorsey of Inside Sales Excellence, the #1 Patreon group and YouTube channel for tech sellers and tech sales leaders, where we dive in deep for tactical advice on how to book more meetings, close more deals faster, and lead sales teams to success. But we don't stop there. We also focus on the person in salesperson. We talk about mindset, goals, time management, and so much more. So thank you for listening. And if you're interested, head on over to patreon.com/inside sales excellence. Now with that, grab a notepad, get ready, and let's dive into the good stuff. What up, everybody? Welcome to another episode of the Live Better, Sell Better podcast. This is your host, Kevin Dorsey, aka KD, and I have a fun topic today because this is not a topic that we have touched on yet in this podcast, but it has been requested many, many times. We're diving into the mysterious world, the unpredictable world, and the incredibly exciting world of crypto today. Cryptocurrency. Now, if you read, depending on the channels you read, either crypto is the future or crypto is a scam. Either crypto could produce generational wealth or crypto is a Ponzi that will lose all of your money. And so I am so excited to have Josh Rhodes on the show with me today. He's the founder of Crypto Y'all, helping people create passive income and smarter investments through crypto. So we're going to be diving in today, asking the questions that either we've always wanted answered or the questions that we haven't even thought to ask yet. Josh is going to dive in, and I'm pumped. Josh, my man, welcome to the show.
Man, honored to be here. What an incredible intro. That's awesome.
You know, I'm told this is only the reason why guests show up anymore. It's like, KD, I just want to hear the intro. It makes me feel pretty good. And then deuces, I'm out. I'm like,
you're a pro intro. That's great.
Well, I am excited for this topic. And I know a lot of people, are as well in the community. So we'll start with obviously just very high level, right? Like crypto could mean so many things to so many different people, right? And so in your description, right, you see, I help crypto curious people create passive income with crypto. When you say crypto, what do you mean?
Well, I think I'm a word picture guy. So crypto's a big, it's a big time. It's like, hey, let's go to the zoo and see some animals. And you walk in the zoo and you're like, wait a second, there's a lot of species here. So it's really important to understand that not all cryptos are created equal. They don't all do the same thing. There's various utilities, and some are absolutely not worth your dollars. Don't trade them, right? But the overall idea is that it's an emerging technology called blockchain that is going to advance and make more efficient our society. I think that's probably the most basic thing. And I always like to gravitate towards Bitcoin because it's the largest market cap. It's obviously the poster boy, but it's actually not crypto. It's Bitcoin. It's set apart and it's different. But if you can understand Bitcoin, you can understand the rest of the crypto world. And so the first thing I always like to tell people, if you're entertaining Bitcoin as an investment or as a utility, it's very important to look at it as a peer-to-peer network before you actually look at it as another kind of money. It's important to understand that it's the largest decentralized network of computers on the planet, larger than any Google server farms, larger than any government building or network of, spyware. It's the largest computer network on the planet, and it's decentralized. So it's not controlled by institutions, greedy Wall Street bankers, governments, corrupt dictators. There's no one who can manipulate it. And the ultimate idea, the philosophical side of it all, is so that Kevin and Josh can be our own bank, and that we can be. It's the greatest exercise in self-autonomy and self-reliance that we've ever had as a human race. And so that's kind of the first preliminary things we need to understand. Now that sounds big and ethereal to most people. Most people are just like, hey, should I invest $100 in Bitcoin? But I think it's really foundational for us to understand that these are, it's kind of like when the internet was coming about. I was growing up, I had dial-up barely out in the country of Northwest Alabama. I didn't know what I was dealing with at the time. Obviously, now you and I are talking on a video screen in remote locations. In the future, or even now, like if you had $1 billion and you lived in Shanghai and I lived in Hawaii, and you wanted to send me that $1 billion in a matter of moments, you could because of crypto. And you could do that without the permission of governments or without asking banks to get, help us out and give us, give us credit and take 7 days for it to settle. And that's kind of the most basic utility of what Bitcoin would be. And then all the other cryptos have different utilities in the world: security, storage, programmable money, the list goes on.
And so I want to touch on something that gets brought up there often, right? It's this idea of decentralized and unregulated. Like, well, what about the criminals, Josh? Isn't this just how criminals are sending money so the governments don't know where it is? Talk to me about that.
Oh, well, I think that's always an interesting talk track that's fed to us by the traditional financial system. The beautiful part about crypto is that it's built on open ledger technology. It's the most transparent financial scaffolding that we've ever had. You can actually see the money moving literally in real time, and there's clear records of it. Whereas if you told Wall Street that they had to do that and show that to us every day and show us what's going on, think about the insider trading, think about the manipulation and things that happen that just because of some rich hedge fund or some central banker made some kind of emotional decision or had a self-aggrandizing moment that they might tank an entire company or manipulate some publicly traded business. In crypto, it's all out in the open. So you can see what the whales are doing. You can see what the minnows are doing. It's all there. So it's just kind of like a double standard that a lot of people throw out there.
100%. And that's why we're having this conversation, because if you don't know, if you're just getting in, that's what you hear.
Yeah.
Right. And just going through it. And so let's go another layer. And actually this sets up the next question, right? It's you start looking into crypto, you're going to hear things like altcoins. You're going to hear things like layer 1, layer 2. What are some of the common terms that someone getting into crypto should be aware of? And kind of what do they mean, right? If I see a layer 1 or I see a layer 2 or I see altcoin, right? Yeah. What does that mean?
So there's Bitcoin, and then there's everything else. And everything else virtually falls under the umbrella of altcoin. Altcoin meaning alternative coin, alternative protocol, crypto investment vehicle, whatever you want to call it. And they are really, honestly, if we're all being really honest with each other, a bunch of software companies. And those software companies are simply leveraging the new emerging technology of blockchain. Bitcoin is truly the only decentralized of them. There are a lot of them who are striving to be like Bitcoin and emulate what Bitcoin has achieved over the last 13 years. Unhackable, uncorruptible, completely durable, sound money. But not all of them are trying to emulate Bitcoin. They're not trying to be Bitcoin. They're trying to do other things that are completely different from a utility standpoint. And so in the same way that, the Cash app and Windows operating system aren't trying to do the same thing. They're still softwares. They still have utility, but they're different. That's the way you have to look at altcoins. And so whenever you're assessing or qualifying or considering investing in these coins, and I'll use the contrast of Dogecoin or Shiba Inu or a lot of the meme coins that become very popular because of lightning rod influencers like Elon Musk or somebody might get behind them. A lot of times those community coins, they quite literally become valuable or have a market cap because of Metcalfe's law of adoption, which literally just means a bunch of us bought it or a bunch of us got into it because we followed hype. Now it has this critical mass and it has a market cap, but it doesn't have a utility. Like Dogecoin, Shiba Inu, they're working hard. If you follow the headlines, if you read behind, they actually are working hard to try to hurry up and backfill utility. Whereas the Ethereums of the world, the Elrons of the world, the Avalanches of the world, Polygon, Solana, these are some of those layer 1, layer 2s that you're mentioning. I consider them the railroad tracks. I just think about like when the United States was growing westward, and they had the internal river waterways, and they had the railroad system that they were building, and those became the central platforms of commerce and interstate exchange. These layer ones, they're basically like the Ruby on Rails for currencies and various crypto projects. So like the majority, like I think I don't quote me on this, I think it's somewhere north of 70% of all altcoins are built on top of Ethereum. Mm-hmm. So these layer ones and layer twos provide the foundational future and functional foundation of altcoins, which is the reason why I tend to invest in a lot of layer ones and layer twos as a part of my appreciation strategy long term.
Nice. And that actually segues into the next thing I wanted to touch on here is the difference between investing and trading. Because I think people get those twisted a lot, right? Of like, am I an investor? Am I a trader? And so I'd love to know, one, like how you consider yourself, and maybe you do both, but also explain to people the difference between investing in crypto and trading crypto.
Yeah, and I'll up the ante a little bit, and I'll add one more, which is the crypto slot machine gambler, which I think 98% of people fall into. Most of the people I interact with are crypto curious beginners. Yeah, I bought Bitcoin and Ethereum 4 years ago. I haven't touched it again. I don't know why I bought it, and I don't know what to do next. Or I bought Dogecoin because I saw Elon tweet about it, but I don't know why I did it. I just kind of was hoping to strike it rich. Right. But, traders are a frequency thing. There's a lot of technical analysis that goes into it. People are trying to scalp the next 5% pump and trying to sell before the next 6% dump. And it's very hands-on. It's very consuming. It's very, honestly, anxiety-driven. It is not for me. I am very much an investor. I tell people I don't do day trading. I do more like quarterly trading or quarterly investing. And I actually have a framework that I call the crypto flywheel. And it has 3 elements. One of them is cash flow, creating the house money or the passive income, daily residuals. The second part of the flywheel is called appreciation. That's where I'm taking my cash flow and I'm increasing or strengthening my position in layer ones and layer twos and blue chips like Bitcoin. And then layer 3 or part 3 of the flywheel is leverage. That's where I use my bedrock portfolio assets as collateral to buy more cash flow. So like, last year, I used Bitcoin as collateral to buy rental property. So I bought 2 rental properties using loans that I took out against my Bitcoin. And then I used the cash flow from my rental. They were turnkey, so I already had tenants and cash flow. So I took the cash flow, paid off the loan against my Bitcoin. And now I own 3 assets, not just one Bitcoin asset. And so using that to increase net worth, you're an investor rather than a trader. And you have multiple dimensions that you can leverage crypto rather than just trying to trade one crypto for another or for USD.
Yeah. No, I love that, and definitely might have to do a part 2 so we can get into that a little bit further. Because I think a lot of people, right, they hear this and they're in that, well, I bought some Bitcoin, like I put a couple grand in, or I bought some Doge, or I bought some Shiba, and you're like, where do you recommend people get started with investing in crypto? Right. So I'm hearing this, and because also too, the main audience for this are salespeople, sales leaders. Like they're making good money.
Yeah.
But no one's ever taught us what to do with it.
Yeah.
Like we just make it and we're like, all right, then what do I do? So where should someone start with investing in crypto?
So you have to there's a little bit of a cadence you have to pretty much follow. You have to obviously start with fiat currency. So US dollar or the British pound or whatever country you're in, Australian dollar, Canadian dollar. And you've got to start there. And then you've got to be like, okay, where do I exchange this $1,000 or this $20 for Bitcoin equivalent? So you got to have a central exchange. Central exchanges are typically publicly traded companies, sometimes, not always, but big names like Coinbase, Gemini, FTX, Bitfinex, Binance. The list goes on. There's literally 200 probably globally. I can't remember how many there are now. And I have 3 or 4 different central exchange accounts that I use for different purposes. But if you're just like, hey, I want to go buy some Bitcoin and Ethereum, go set up your central exchange account. connect your bank account. So you'll literally connect your retail bank account, Wells Fargo, whatever you use, and you'll deposit money either through ACH or wiring. Wiring is better, by the way, just a little pro tip. If you wire the money, the central exchange will not put like a 7 to 10 day hold on it. If you do an ACH, they will. And it's all because of like fraud. They're trying to do like anti-fraud measures because you won't be able to move your coins out of your central exchange during that lock period. The last thing I would say, just in good measure here, is once you've purchased your $500 in Bitcoin or whatever, make sure you understand that these are custodial accounts, which means we have this saying in crypto, not your keys, not your crypto. So they are basically stewarding your property for you. And something could happen to that central exchange and your property would be seized by the government. It would be stolen by a hacker. It could be whatever. There's all kinds of, third party possibilities. So what I do and what I encourage people to do is if you ever have more than $10,000 in crypto, really, that you're not actively managing, like if you're just like, hey, I'm in Bitcoin for the long haul. I'm going to 2030. I think it's going to $1 million of Bitcoin. It's going to $10 trillion market cap. I'm going to hold my Bitcoin forever. Move it to a cold wallet. I'm holding it up here for people watching on the video, but I use a Ledger. There's another brand called Trezor. The whole purpose of an offline cold wallet storage, these little USB hardware devices, is for you to be your own bank so that no one can come in digitally and remove, seize, or manipulate your holdings. And ultimately, you've got to view your Bitcoin, your crypto as property, the same way you would not want someone to try to steal the deed or ownership or survey title to your home. You need to completely and securely own your crypto keys, these private keys. And those are kind of the social security fingerprints of your crypto property ownership. So definitely use offline storage devices. They're $100. It's not hard and they're easy to use.
Nice. But what happens if you lose it, Josh?
You're in trouble. So I have in various places in my house, and these devices, these cold wallet devices come with little cards, like they know. So you write down your 12 to 24 word secret phrase, put them in your safe, put one in your drawer, put one under your mattress, whatever you got to do to keep redundancy, kind of outthink yourself and outthink your human flaws. Some people could argue that these central exchanges spend millions and millions and millions of dollars on security. And I think that's a valid argument. But like I said, I think crypto is the ultimate expression of self-reliance and autonomy. Now, that could be a two-edged sword, because if you do something stupid and give somebody your private keys, you've given them your crypto. Yeah.
I did that dude is outside of London. Did he find his $1 billion hard drive yet? There's some guy that threw away a hard drive accidentally 4 years ago.
And he's like out in the dump.
And he's searching every day, section by section of this dump to find this hard drive, because the hard drive's worth $40 billion or something right now. It's crazy. So, okay. So this is I'm loving this so far. So then let's go to the next part of but then how do I make money? Right? So, okay, I'm investing. Is that it? I just put $500 in and I hope it goes up. You kind of mentioned how you make money off this. You can reinvest, how you can leverage it. So actually I'm going to take a step back. A phrase that caught me off guard early on, you'll see where I'm leading to this, was dollar cost averaging.
Yeah.
Right. Can you talk about that a little bit? Because I do this timing of the market, right? For most, call it retail investors, we buy it when it's too high.
Yeah.
And we sell it on the way down, right? Versus, buying either at the bottom, selling at the top. But talk about dollar cost averages and kind of the market timing. And then we'll go into how to actually make money.
Yeah. There's almost this sociopathic emotional brain function that goes in for retail investors of the market. Like you said, most people buy at all-time highs and they sell because they panic and they think the sky is falling. And it's just a development in individual, investment maturity that we all have to acquire. But yeah, probably the most powerful tool as a retail investor who's just trying to keep it simple. They're trying to pursue a career. They don't want to be a trader. They just want to put their money into a good store of value. Dollar cost averaging is really smart because it allows you to purchase rhythmically. Some people might call it a drip account or something like that, but just setting up a rhythmic daily, weekly, or monthly investment. You're basically, instead of there's a saying, time in the market is greater than timing the market. And so just being in the market with a rhythm allows you to basically buy areas of price. So if you're looking at charts, instead of trying to be like, I'm going to time the bottom and time the top, nobody does that. Literally, the professional traders can't do that. No one knows. And so what you do is you just simply go, oh, well, Bitcoin's at $29,000 right now. Great. I'm buying $100 a week, or I'm buying $1,000 a week. And I have it set up through my central exchange or through my app of choice. I really like the Strike app, by the way, but that's just a Bitcoin like Venmo type wallet. It's really cool. And just buying at a like, I'm always going to buy $50 a day, or I'm always, whatever that is. And when you do that, you're buying areas. And so what you end up doing is, I might butcher the definitions. You're basically averaging your dollar cost averaging. You're getting that median price of the asset over time, so that swings and volatilities don't necessarily hurt your purse over the long term. And it allows you to just be consistent, but you still are acquiring and accruing the asset that you believe in. And I think the biggest thing to dollar cost averaging is to DCA into something that you have almost a religious conviction about. That's obviously hyperbole, but I'm purposeful there, because if you don't know what you're investing in, then you are crypto slot machine gambling. You're just waiting on, lucky sevens to line up. So, read up on it, watch a few YouTube videos, listen to a couple of podcasts like this, then start investing in something that you believe in. Warren Buffett doesn't buy companies because he heard Josh and Kevin on a podcast. He actually reads, he actually looks into it. So there's no reason why we can't exercise the same discipline.
But the YouTube influencer told me it was going to the moon, Josh. They told me it was going to the moon.
And that's the reason why I started Crypto Y'all, because when I got into crypto in 2017, I had been a real estate investor and business owner, and I had read the Robert Kiyosaki stuff, and it changed my life. And he gave me language as a country boy from Alabama that doesn't have an MBA from Harvard. And I understood assets and liabilities. So when I got into crypto, I was like, oh, wait, this is an asset. This is an emerging asset class. This is property. But I started looking on the internet, Twitter, YouTube. There's a lot of smarmy, scammy stuff. And I just was like, man, we don't have necessarily an edge on everything here in the South, but one thing we're known for is hospitality and core values. And man, what would be awesome is if, like when I was growing up, people needed help. People would come to my door. My mom and dad would be like, hey, y'all come on in and stay a while. That meant come in, let's talk about this as friends. Let's work this out. Let's help however we can. We didn't grow up rich or anything, but we helped. My dad was very generous. And I just was like, man, what would it be like if we could merge the essence of what I was just talking about with the greatest financial technology on the planet, which is crypto? It's a huge innovation. Instead of there being charlatans and cobras and vipers out there that, are taking advantage of new retail investors. So that's where Crypto Y'all comes from. Not that you asked, but that's just kind of the heartbeat behind it.
No, I love it, because I know when I got in about 3 years ago now, right? So that'd be 2019, right? Right before, of course, COVID and everything else. Like, same idea, right? It's like I didn't know where to start. The information out there can be overwhelming, right? Of like, okay, like where do I start? What does this mean, right? Wait, DeFi?
Yeah.
Right, wait, staking? How do I stake? Do I want to stake? How do I do leverage? Is leverage a good, like, you have all these things that are overwhelming. I think that's why I was pumped to reach out to you, because like, I do agree that this is a future in a lot of ways. And like the timing of this, right, might be our only like internet phase.
Yeah.
Of like, if you got in early enough, this can be generational wealth. This can set you up down the road. So now let's move that next step, right? Of like, okay, so how do I actually make money in this? All right. So I've set up my account. I'm dropping in $200 a week, right, to Bitcoin and Ethereum, right, or Bitcoin and a couple of the other ones I believe in. Is that it? And we sit and wait? Or are there other tactics or techniques you have to accelerate that growth, to actually make money back?
Yeah, one of the biggest things that I get my cohort members to do is the very first thing is you have to state your ferociously specific desired outcome. What is it that you're wanting to achieve with crypto? Once you understand conceptually what's possible, if you know you can create cash flow, if you know you can have accretive assets over time, you know you can have leverage, then what's your goal? What do you want to do? And so we'll just take DeFi for example. DeFi is it's kind of like the back corner of the zoo that a lot of people don't know much about. It's where the exotic species lie. There's fun parts of the decentralized finance is quite literally supposed to end up being the functional replacement of traditional finance and banking. And everybody's frustrated when you look at your checking account at your major retail bank and you're earning 0.02% interest. I actually had one of my cohort members go, "Hey, I've got $30,000 sitting in my checking account and I made 10 cents on it last month. And I had $17 in a DeFi project and I made $20 off of it this month." That's messed up. And the reason why it's possible is because what DeFi is doing is they're saying, "Hey, Kevin, hey, Josh, bring your money to the center of the pool with us. We're going to create this treasury. And then we're going to go out as a treasury and we're going to quote unquote farm yields and profits from other parts of the algorithmic crypto society because smart contracts are better, faster, and stronger than human fund managers." And they go out and play math. They flip the numbers. They do all of the stuff. They do the investing, and then they bring the yields back to the center of the pot or the table. And they say, "Oh, Kevin and Josh, this is how much of the liquidity of the tokens that you own proportionally. Here's your profit. Here's your yield." And a lot of times that happens. It's facilitated completely by algorithms and or smart contracts. So it's really efficient. So you and I could be, I don't know, every 30 minutes of the day be earning a little bit more, a little bit more, a little bit more, to where maybe we're earning, I don't know, 0.5% to 2% a day on our capital, which is nuts. It's a big part of the decentralized environment that makes it possible for you. So you can create cash flow off of that. And then you got a decision to make, right? Like if I'm making $50 a day off of, a $5,000 capital investment, what do I do with that $50? Do I just let it keep compounding? Is there sustainability there? Can they keep paying me that much? Do I move it to a blue chip? Those are the things that you have to have a framework for and like an investment strategy for. That doesn't have to be complex, but you just need to know, all right, think ahead. If this happens, then what am I going to do with these funds?
I love that because it's just an opportunity, right? Because also I got rugged in one for sure. I was like, oh my God, like put 10 grand in and I can make $1,000 every week. Like, yeah, I'll do that. And you got the little calculator, right? It's like, I'm gonna have 50 Lambos in a year, right? And it gets you all caught up in those things. And so I love that call out of just the investment strategy and frameworks. I think that the key and underline in this, especially obviously it plays out in the stocks too, but just the emotional side of these decisions.
Yes.
Right. Like the FUD that shows up, like making emotional investments. It's like, oh, you get excited, so you invest. Then you get scared and you sell. Right. And the emotions are there. So like, what would be your advice to manage those emotions through this? Right. Because to be honest, right now, crypto's not in a great space right now.
Mm-hmm.
Right. Like it's taken a pretty big hit over the past, 6 to 9 months. So that emotion can come in. So like, how do you advise people getting started to kind of regulate that emotion, to not get too caught up in the ups and downs and keep that future focused mindset?
I think it all starts with your basis, your cost basis. And the way you make sure that your cost basis is floor level, meaning you get it in a great price, is when you start. So yeah, right now in the headlines and in the mainstream media, crypto might be taking a beating because of its performance, but so is the S&P 500, so is real estate, everything else. So the entire world economy is at a place right now the first piece of advice is buy blood, buy fear, buy depression. That's just how you win. Whether you're going into the stock market, whether you're buying repos after the 2008 crisis. I was putting a for sale sign in the yard when Bear Stearns went under in one of my real estate investments in 2008. Like I went through the subprime, but so I had purchased at the wrong time. So don't purchase at the apex all-time highs of the market. Keep your keep your gunpowder dry, right? And make sure you're ready to buy the fear in the blood in the streets. And so right now we are actually in an unbelievable time. And we'll be in a phase here in the market, not to do technical analysis on your show, but like to understand that we are in this bear market. And these are the times when savvy investors enter their capital. And the emotional part, or the emotional management part, is don't invest money that you need liquid, that you need to pay for a down payment on a house if you're a newlywed, or you need for power bills or whatever else. Don't be putting that money into, only invest money you don't need to be able to access, because you need to let the market waves come in and out. It's a patternistic approach. What goes down will most likely come up. And that's just kind of how you have to think about it.
Love it. All right. So as we wrap up here, my man, what are your favorite investments? And give me the two categories. Stable, yep, I believe in this. And then what are some of those this has a shot. This might be one of those ones that does a big move or two over the next couple of years. So give me kind of your favorites in both categories.
I'll break it.
Actually, let me
yeah.
You know what? Give me that one. But I was but the second would be someone just starting. I have $1,000.
Yeah.
How would you split that up? So I would love to know kind of your favorites, what you believe in. And then if I have $1,000 right now, how would you divvy that up on a regular investment schedule?
$1,000. If you're just trying to get in ankle deep and feel the waters, and you don't need the $1,000 for the next 6 to 12 months, I would actually, for the fun of it, I used to say 50-50 Bitcoin, Ethereum, just so they're the two largest market caps. But right now, I'd probably say 60-40, 60% Ethereum, 40% Bitcoin, just because there's some really fun, interesting Ethereum updates that are coming down the pipe, might triple, quadruple the price somehow, especially in the next bull market. That being said, favorite large cap, love Bitcoin, love Ethereum. I'm always buying more of that, especially during bear markets like right now. I keep cash and stable coins available to purchase, and dollar cost average just constantly there. Mid cap, or let's just say DeFi. We'll have some fun with some DeFi projects right now. And depending on when people listen to this, things might change, One great American-based project that I really love the community and the development around is a Utah-based company coin called Giddy. Giddy is trying to popularize, these are my words, not theirs. They're basically helping to popularize and make more accessible the world of DeFi through their mobile app. And they have this incredible promotional reward time frame right now. They've got a lot of great total value locked. TVL is a metric that you want to be watching with these DeFi protocols. They have great TVL, and they have a lot of great financial backing and a really, really sharp leadership team. Speculative, risky, but I really love their roadmap, is a DeFi protocol called Sphere Finance. They are the paragon of what a company or what a crypto protocol does during a bear market. They are building lots of utilities, lots of decentralized exchange type facilities that allow their investors to earn income off of the fees, transaction fees, and various revenue streams that they're creating. It's really, really impressive. The ticker symbol is Sphere. The ticker symbol for Giddy is Giddy, Giddy. And then what's one more? Oh, layer ones. I've been investing in AVAX. Avalanche for years. Love that. I think there's a ton of upside there right now. And then lastly is Chainlink. Chainlink is an Oracle service. For those of you who don't know what that is, it means blockchains and smart contracts can only work with the data that they have available to them. So how is all this internet outside world data going to get into the hands of a smart contract to become smarter? Well, you have to have an Oracle service, basically a pipeline that imports all of the outside data from the internet and the world onto blockchains. And Chainlink is the basically monopolistic player right there in that space. And they're down right now along with the rest of the market. Awesome time to gobble up that.
Love it. I love it, my man. This is so good and so valuable. So I got 2 questions left for you here, right? So first one is, name of this podcast is Live Better, Sell Better. Now, we didn't talk much about selling today, which is fine. But the core premise of this podcast is I also have this weird idea that if we lived a little bit better, if we had more energy, if we took better care of ourselves, if we had more joy, happiness, and fulfillment, that the results we're looking for improve. What would your live better advice be for people listening? So we talked obviously a lot about crypto and investing today, but like in terms of like getting more out of life, what would your advice be to people listening?
Oh, man, I wish I had this big, crazy, sexy, romantic, hyperbolic thing to say here, but I think a couple of things. I think a couple of core tenets would be identify your purpose. If you're out there working and selling, and you're just like, hey, I'm Scrooge McDuck wanting this, swim in my vault of gold coins, you're probably going to find yourself lonely and depressed pretty soon. I think what you want to do is to have a why, or to have a purpose for why are you wanting to get rich? What are you going to do with that? For me, it's to be more generous and be benevolent and to help redeem the world around me and my family, because I think that's our proxy. That's our proximity of reinvesting into the world. And I found that is where you get the most fulfillment. If you look at Maslow's hierarchy of needs, right, the very base of it is to keep us alive and to keep us safe. But at the very top, it's self-realization. It's self-fulfillment. And you can't do that unless you have some kind of purpose that you're investing in every day. So I think that's how I would explain that.
I love it, man. I love it. And it doesn't always, funny enough, more often than not, they don't have to be big, sexy, like, wow, I've never thought about that. It's some of the foundational and fundamental things that make us human that we tend to get away from over time, which is unfortunate. So, all right. And my last question, man, where can people learn more about this? Like, where do you have content? Where can they sign up to learn? Consider me a new student of yours, whatever you're about to say, I'm signing up for. But like, where can people get more of what you're putting out? Where can they learn how to do some of the strategies that you're talking about?
Yeah, I offer at cryptoyall.co, depending on the time and the day, you'll find different things like newsletters or trainings that you can jump into, whether that be preliminary, early, foundational training, or newsletters that might be about altcoins or upcoming investments that I'm making. I manage a hedge fund as well. And so my community has access to everything that I'm doing with my portfolio. And so that's just a fun place to get started with us at cryptoyall.co.
Hell yes. Well, we will add that link in the show notes for sure, y'all. But Josh, my man, thank you so much for the time, the energy, the insights today. This was phenomenal. Probably going to have you come back for a part 2 on this as, people start to ask more questions. But really appreciate your time today, man. That was great.
Honored to be here. Thanks.